Welcome to the Finance Story. Today I have with me Naganand Doraswamy, who is the founder of Ideaspring Capital. Today we are here to talk about his life. How are you, Naganand?
I'm doing great, Vishal, and thanks for having me on this podcast show, and looking forward to a great conversation with you as always.
You've had a long career. I just want to talk about those early days in Bangalore in the 70s and 80s for you. Life was hard, but it was nice, right? You have to tell us what built you to take science and engineering.
Obviously, my dad came from, he was an engineer in a public sector, Indian telephone industries. And my mom, she also used to work. So growing up, I saw both my parents working. And obviously, coming from a middle class family, we had money for what we wanted to do, which is eat good food at home and study in government colleges or whatever. But it taught us a lot of things. And the other aspect is, growing up, I grew up with 15 other people in our house. It was a fabulous time that we had, and I would not give out that for anything, right? None of the people in our house were medicine oriented. So obviously the entire inclination was towards engineering.
You went to UVC, right, which is another prestigious institution. You took computer science when computer science itself was a distant fourth in India, right? Why choose?
See, the deal was when I joined UVC, computer science was not even there, right? So when I joined UVC, I took mechanical engineering because I liked mechanical engineering. And halfway through my first year is when UVC said computer science is starting. First year was common across all branches, right? You study the same irrespective of which branch you went to. And they said you can apply and it'll be based on merit. And I was completely confused whether to do it or not do it. And in fact, I applied on the last day for computer science because it was so confusing. I think the driving factor is I had a cousin of mine who was our CEO of Span System, my cousin brother, whom I look up to quite a lot. His name is Pradeep. And he was in ITI also at that time, and he had joined TCS by that time. And I went, he said, it's a no-brainer, you have to take computer science, right? Because he was already in that field, right? That's how I ended up doing computer science. So
yeah, a lot of people don't know, but I think in the mid 80s, a lot of you saw a first generation set of people go to the US, right? And you finished UVC and immediately went to Virginia Tech, was it?
After UVC, I worked in PSI for a year.
Okay.
It was the great company. It was known for its hardware, and it was a great engineering company in those days. And right out of school, the first project. Now, what I worked on was taking the AT&T operating systems kernel and porting it to a 68030 based board. Which was a fabulous thing to have started off the career with.
You went out to work for Bay Networks, Nortel, Photonics Corporation. I think you wrote the book when you were in Nortel, right? I think you did write when you were in Nortel.
Yeah, Bay Networks Nortel.
The nuclear winter of 2001, right? Bad times, everybody came back to India, but you were in the US, you set up Span, right? Can you tell us about the transition that you made from a hardcore tech person to becoming a business person?
But let me give you the quick history, right? Span is a company 5 of us co-founded, all of us who grew up together, and all engineers. And my oldest cousin, he was from IIC grad. The next two were IIT and IIM grads, and my brother, was IIT and NYU grad, and me, right? So 5 of us started, but that was in '94. And I continued to consult with the company because we are building products for other guys. And I stayed mostly as a consultant because I was having other jobs in the US. I started working for my own startup in 2005 when I moved back from the US. Outside of that, I was a founding member of a company called Photonics, which you mentioned, which was doing a 1.6 terabyte long haul optical transmission system, right? And there I was a software architect, and also, because of having gotten in early, I also became a software director, right? And that was my first management experience, quote unquote. That company closed down because it didn't survive the nuclear winter. And then we are trying to do another startup in the fixed mobile convergence space, where I still continue to be technical. And we couldn't get funding. Tried for a year, couldn't get funding, so I had to close that, right? That's when, for various reasons, we moved back to India, right? And then when I moved back to India is when I joined Span, and that's where I kind of where it completely went away. Although you understood tech and you were still tech oriented and you participated in all the architecture meetings and so on and so forth, business side of it started to take more importance in your execution, because you had to start building the company, right? And that's when the realization set in that, tech is good, but if you want to really get to someplace, you have to become a good techno business guy, right? If you want to make an impact in building something, technology plays a significant role, but it is more than tech that allows you to build something, right? And that is what that realization slowly came in. And then that's when the transformation from a pure tech guy to a techno business guy started. And you also started to realize, if you look at most of the product companies that are there, the people, the CEOs or who are driving that, they're all solid tech guys who got into product management, who build products, but then started to see how to take those products to the market. Not only do you have to understand tech, you have to know who to sell it to, why they will buy, how do you position it, what's the messaging. So that started throwing in a whole bunch of new challenges that I was not even aware of. So that is when, the transition really happened from a pure tech guy to a techno business guy. And then Span helped me to further understand what it takes to build companies, build businesses, right? Because that's a different ball game altogether. And that's a very, very interesting area by itself. Span is I got exposure to various aspects, right? I did R&D, I did HR, I did operations. And also I did IT inside the company, because you're 1,000+ people. So, you kind of, you start to realize that hence your base has to be wider if you want to build something larger, right? Having a very narrow focus, just tech is not going to help you. Like I tell my startups today, like 20% is technology, 80% is building business, right?
I want to know, how did the Ideaspring Capital happen? I know we are, Mohandas Pai was part of it. It was a 130 crore, fund focus on tech. Like you said, can I find great tech entrepreneurs who can build great businesses, which is very different.
So Vishal, that path to transitioning from an entrepreneur to a fund manager, right? Why the transition and what made me do that? 2-3 fundamental reasons why I did it. So number one is obviously post Span acquisition, what next was the question, because I still wanted to contribute significantly in the startup ecosystem. And there are only 2 ways. I didn't want to become an employee again. After you have become an entrepreneur, it's very hard to become an employee. Or only 2 options existed. So either you do your own startup or you do something to work with startups. Doing my own startup was hard. You have done 3 and you're already you're hitting 50. And you need to have an idea. So, and then even if you have an idea of 5 years of solid work, I wasn't very confident that neither did I have an idea. Number 2 is, since moving back to India, I was also intensely part of various startup ecosystem, Indian Engine Network, Thai Bangalore President, and part of Thai Global Press. So I was dabbling quite a bit in the startup, right? And one of the things I realized during those days was there are a lot of GICs, Global Innovation Centers in India. B2C is quite well known. Entrepreneurship is well accepted. By 2015, 14, it was better accepted than what it was in 2010, 2011. And then I said, and since B2C is well accepted, I thought the thesis was at that time that people will come out of these GICs to do good product companies from India, right? Because all my life I've done products, and I thought the next wave will be the products. When these guys come out, there has to be somebody giving them initial capital for them to get going, right? So what we thought was, why don't we not just give capital, but also bring in our exposure? Because we had the people in the fund were all entrepreneurs, right? Suri is an entrepreneur, and Arihant Patni, just built businesses. We said, why don't we hence look at only those companies that are just focused on building products, not only for India, but for the world. So our thesis there was, India, the next phase after services, after B2C would be B2B, not only for India, but for the world. Because B2C, as you know, is very inward focused, country focused. Whereas B2B will be world. So we thought we'll become a product nation and sell to the world. And that's what got us going. And that's what, when we spoke to Mohandas Pai saying, look, we want to do this, he was extremely supportive. He was the first one who committed. I think it makes sense. Let's go do this, right? And obviously trying and convincing somebody, a first-time fund manager, zero experience, and I had no clue how funds work and how to, how to return capital, zero understanding. But people whom we went to, we told, look, don't give us money because you'll get returns or, it's a fund or whatever. Give us money if you're passionate about the idea, right? Because it's a huge risk you're taking. First of all, you don't know if B2B companies are going to take off in India. Secondly, we don't know if we will be good fund managers. We don't know we'll be identify the right startups, because doing startups is different from identifying startups and funding them and getting them productive and getting an outcome. So we only approached those people who kind of had the same passion we had in this, and who said, all right, don't worry about the returns, but I think there is a game to be played. So we said, treat it like a startup, right? So even to date, we don't want to consider ourselves as fund managers as much as possible. So we want to still don the heart and the hat of entrepreneurs and still function that way, saying our job is to identify early stage pre-revenue product companies, give them money and be part of the team, right? And obviously will not take operational control, but be available to them. So whatever questions they have, whatever issues, be available to them to help them in the journey. And that's why we still want to continue to be small, because the larger you get, you have to play in the later games where you have to become a financial guy in addition to just being a techno business guy, right? So that's the whole thesis. That's how we got Ideaspring going.
What have been the returns in the first fund? And let's get into what are the type of entrepreneurs you picked.
So the fund size is 118 crores to be precise.
Okay.
So very close to what you're saying. So in terms of the metrics, we committed 22% IRR, because I told people, don't hold me to those numbers. We'll do our best to give you that returns. But fortunately, we are doing on paper, we are doing 25 plus percent IRR, which is very good, right? But most importantly, we also have given 40% of the total fund already because of thanks to numinocity exit. And that's a good metric to have for a first-time fund manager. So overall, from a financial perspective, I think we are doing reasonably well. But I always tell people, we still have ways to go, right? Because you really want to invest, give returns of multiple X of the capital you have raised. There's a lot of ifs and buts in our industry. So I don't want to commit to anything, but there are 4 companies doing more than 2.5-3 million revenue now. Those guys will exit, right? We know that. And our other thing we got out with our mindset is, we should enable exits in India. So our thesis was, if the startups get to 8 to 10 mil, we are old school thought process. So we'll say 6 to 8x is our multiple you'll get. We are not this 25, 30x multiple guys. With that, even we can enable those sub 100 mil exits in India, and 2 good things will happen. One is we will give back money to our LPs, number 1. But number 2, which is equally important to us, is we will hence start developing the ecosystem, because the founders would have made money. They will come back to a stronger startup, and the early employees, who were part of the company, they are motivated to do a startup. So that way, the virtuous loop of product innovation in India will kick in. So hence our focus, even when we talk to founders, this is a conversation we have with them early on, right? Because to me, honestly, when you fund something, there's no way to know where this company is going to go. Whether it's, it's going to get to 10 mil, it's not going to get to 10 mil, can it get to 100 mil? You have no visibility on any of those aspects when you fund. But when you get to this 8 to 10 mil, right, you will know, you'll have your visibility of, can this company become $100 million company if you were to raise the next round of capital? Right? Or are we much better off being the part of a much larger umbrella to help the company grow? I think these choices has to be made when you get to this point. And we have a clear discussion with the founder.
What are your thoughts around a founder knowing finance? Is it important for you?
I think it is mandatory, right? I don't think it is very, very hard for us just to invest in a person who is just technologically very, very smart, right? For the reasons I discussed before, because in building a startup is only 20% is tech, rest and all is other things, right? So if you don't find a team that is balanced with business and technology, it's very, very hard for us to invest, irrespective of how strong in tech a particular founder is. So if you have a founder who is very, very strong in tech, and you would have to find complement in other founder who can look at the business side, right? And invariably that founder will be techno business. So hence we will not, it's very hard for us to invest in a startup where at least one of the founders is not techno business, right? So it's a mandatory thing for us to look at. So there are only, in fund one, there's only one company we invested in, Karomi, which was a single founder company. But that founder had built business, right? And
Yes,
he understood the business. So we are okay. But in all other companies, we have had at least two founders. One founder can be,
in level, it's Shamal and Karthik.
Right, when we started, and now there are more co-founders. And any company you take, hence there are two. One very, very strong technically, one techno business guy who understands the business, because this person has to go get the business, right? Yeah, you can build a great product, but if you can't get the business, so building a great product is a necessary but not sufficient condition to build a company, right? So that's how we look at it. You can build a great product, but if you can't sell it, what's the use in building the product? So,
okay.
And that's the simple way to look at it.
Nice. So the other thing is that, the market is slowing down. So what are your thoughts? Is that money going to come or no? Or into startups?
Yeah, look, we were all talking that, the market is overheated, right? Too much capital coming in, too much money being given, spending happening all over the place without any reason as to why that much money was going. And whether it's a public market or a private market, it had gone out of control. And then we all knew correction was coming. And we see a cycle. Every 8 to 10 years is a cycle. And we knew this cycle was going to correct itself at some point of time. My belief is, in any economic situation, a good company and a good founder will always find people wanting to support them. Number one. Number two, and they will be supported at the valuation that are reasonable. If you say I'm at 50x or 800x of ARR, what the hell are we talking about? Because at the end of the day, when you go IPO, right? Because the exits can happen either because you get acquired or you have IPO. When you go IPO, the institutions are smart guys looking at them, and you say, look, I can only give you 6x, 8x of your ARR. Don't ask me for more than that, because there is a ceiling that you're going to hit. And you create all these waves in the middle, but there's a correct, at the end of the day it will all come down. Now IPOs, as we know, there's a strong correction in IPO, and that will put pressure on Series B, Series D, Series C. That will put the downward pressure. So the pressure, correction will happen at every single level, but by the time it comes to seed, it will take time. But even at seed round, you see valuations happening at the value that we think it's sustainable, right? You cannot do. The other thing is, if you do a seed round at 30 mil pre-money or whatever, where is the growth for Series A? Where are you going to do Series B? There's no meaning in any of these things, right? Now, if Series A starts happening at 15, 20 mil, obviously the seed round has to happen in 6 to 8 mil or even lesser, right? Because round on round, you want to get 3x or 4x. Otherwise, there's no meaning. Why would you want to do a next round at the same valuation? So these thought processes are slowly creeping in, and people have, many of the entrepreneurs have not seen any down cycle, right? Since 2015, it's up, right? So I think reality is coming in. It's a good thing that's happening in the ecosystem. But to your question, whether there's still cash available to invest in good companies at the right valuation.
Is it still for Indian anchor investors, Indian investors only, or available for global players?
We are open to global investors as well, but as being an India fund, 75% of the capital is Indian capital, but we do have global investors, and we want to entertain 1 or 2 institutional investors globally as well, because the fund is of a decent size now, and it's good to have that perspective as well. And the reason we want to do it is, all our companies are going to go global, right? Our thesis Absolutely. Is build local, sell global. So just saying I'll only take Indian capital and not take anything outside is foolishness, in my opinion, because when these companies want to raise next round, you want those connects, right? Indian capital is very important because we want India to prosper. We want in India to get to $5 to $10 trillion economy, and that will not happen if you don't have capital in India. So that becomes important. But we all know it can't be just built on Indian capital till we get to $5-10 trillion economy. So we still need to be open to get global capital as well in this.
Absolutely. And ladies and gentlemen, this is Naganand Doraswamy, the founder of Ideaspring Capital. Thank you so much, Naga.
Thanks a lot, Vishal. It's always fun to talk to you, and thanks Chantal for having me as well. It was good fun. Thanks so much.
And that's a take. Thank you.